Nikita Burdick, and I'm a lender, and I'm also the mortgage mama. I'm a mom to my two sons. This is Colton, and my other son is Connor. And my purpose in life is to help you find a home, but as well be there to raise my two sons, which is why I call myself the mortgage mama. So in this video, I want to go over a few things not to do before you buy a home. And this seems so very obvious, but I have people who do it all the time. So I'm going to bring up some things that come up in real life when I'm working on loans. So one of them is, don't lie about your tax returns. I have people who submit false tax returns to me. And they get pre-approved on them. They're self-employed. So when you're self-employed, we have to look at your tax returns to determine your income. If you're Schedule C, we look at the Schedule C. If you are an S Corp, we look at your 1120S, your W-2s, your K-1s, and we calculate your income. It's not how much money you brought in. We have to include your expenses that you did deductions for, and what was your bottom line number. Well, as a lot of self-employed owners do, they write off a lot of stuff. And so what do they end up doing? Well, they have income where it was $200,000, but then somehow it drops to only $10,000 or sometimes negative. Well, I had a buyer who sent me tax returns that were drafts, and we can't tell because there's no official stamp that says this is the one that was filed. We assume that the ones he sent us were the correct tax returns. But when we get into the mortgage, we order what's called tax transcripts. And when we get the tax transcripts, if they do not match the tax returns, then we know something is wrong. And we're going to figure it out. In this particular case, this guy kept telling me that he had an amendment, and then we kept looking for the amendment, but we couldn't find the amendment. And it comes to find out that we had a tax return that was a false return. We had a draft that was later amended or not filed, and the actual filed one showed a negative income. So if I had known this from the beginning, what I would have done is I would have gotten another borrower on the loan. Fortunately, in this case, we were able to get another buyer on the loan within 10 days and still close on time. So this was great. We got this loan closed. We figured out a solution. This just tells you, talk to your lender. They'll figure it out. They'll help you. If they can. If they can't, they can't. But we'll try our best. The next one is, do not spend your down payment funds. People, you need your money, right? So I have borrowers who go and they buy a bunch of furniture and they want to celebrate that they got this house. They're a week away from closing. We've already got final approval. They're like, this house is mine. They miscalculate how much money they need, even though I've sent them a final closing disclosure that shows you need X amount of money. For some reason, they saw it wrong, or they read it wrong, or they miscalculated how much they needed, and they spend their closing funds. Well, if you spend your closing funds and you can't bring the money to the table, then you're not going to close. You need the final funds to close, okay? Sometimes there's something we can do if it's only a little bit off. Maybe I can give you a little bit of a lender credit, but you don't want to be in that position. So do not spend your closing funds. Wait to buy your furniture until you close, unless you got excess money, like you got lots of reserves in the bank and it's not going to affect your bottom line. Next one, do not deposit large sums of cash into your bank account right before closing. I have people who have cash in their mattress cash under their mattress, tens of thousands of dollars, and they go deposit in the bank. And then I look at your transaction history, which we always ask for an up-to-date through closing transaction history prior to closing. And I see a $20,000 deposit. Guess what? We have to ask you where that came from. And if that was cash under your mattress that has no traceable form, then we can't use it. And now you can't use that $20,000 towards your closing. Okay? So talk to your lender. Make sure you're figuring out where your down payment funds are coming from well before the day before it's time to close. Do not take out a new credit line. I have people who get a new credit lines right before closing. And if your debt to income ratio is close, you do not want to have another $200 or $100 payment hit your debt to income, because that can cause you not to qualify. So you've already been approved, you have final underwriting approval, but now you have an extra $100 per month that we have to add to your debt to income, and now you don't qualify. All right, so another crazy situation I had is someone sold a vehicle that wasn't their vehicle. you can't use those funds. If we can't trace it back, if you got your funds from a sale of a vehicle, we're going to ask for the papers that show the sale, and we're going to ask for the title paperwork to show that it was once yours. If it's not, it's considered a gift, and there's a lot of rules on when a gift can be used. So if it was a friend of yours, then that's not going to be a gift that can be used. If it was your parent, then with a gift letter, we might be able to use those funds. So make sure you're not selling assets that are not yours in order to come up with your down payment funds. Thank you, and I hope you felt that these tips were helpful.